Good afternoon from the New York Stock Exchange. I'm Caroline Woods coming to you from high above the trading floor on this Friday, November 14th. Happy Friday. We're almost to the finish line. Stocks are trying to end the week on a positive note, but it's been a choppy start. We've been bouncing around that flat line. Earlier, it looked like we were actually headed for another round of selling, but then the dip buyers showed up. So we've been flipping between red and green arrows as the market just tries to decide what kind of mood it's in. Still a few hours to go, so we shall see. This comes after a tough day on Thursday. The market's worst in more than a month. The Dow fell about 800 points. That's nearly 2%. The NASDAQ dropped more than 2%, so it was a pretty broad sell-off. So what spooked investors? A couple things. First, renewed concerns about the AI trade and whether some of these tech valuations have simply run too hot. You can see it in some of the former high flyers. Oracle, for example, is down about 6% this week, 14% this month, although it is rebounding today. There's also lingering uncertainty around the Fed. There had been growing optimism about another rate cut in December, but now traders are getting more cautious. The CME FedWatch tool shows the probability of a cut has dropped to around 50%, basically a coin toss at this point. And that hesitation hit rate-sensitive parts of the market. As for what we're seeing today, the NASDAQ is bouncing off the lows of the session and back in positive territory. Investors seem to be looking at yesterday's sell-off as a buying opportunity, and they're going right back to the familiar favorites. Nvidia, Microsoft, and Tesla are all trading in the green after a rough stretch. We're also watching a big move in memory chip stocks. Reuters is reporting that Samsung has been raising memory chip prices, and not by a little. According to the report, Samsung has hiked prices on key memory chips by as much as 60% since September as panic buying spreads across the industry. What's behind it? The global rush to build out AI data centers. Demand has exploded so quickly that the industry is now facing a shortage, and Samsung is taking advantage of it. The standout winner today, Micron, which is actually the best performer on the entire S&P 500 today. Warner Brothers Discovery is also getting a lift today after a Wall Street Journal report said several players, including Paramount, Skydance, Netflix, and Comcast, are preparing bids for the company. According to the Journal, Warner Brothers Discovery has set an initial deadline of November 20th for the first round bids and hopes to wrap up the auction process by the end of the year. Paramount is reportedly interested in buying the entire company, while Comcast and Netflix are said to be focused on the crown jewels, the Warner Brothers movie and TV studios and the HBO Max streaming service, but not the cable networks like CNN, TNT, and Discovery Channel. Meanwhile, Warner Brothers Discovery is still moving ahead with its own restructuring plan to split into two separate companies, one for studios and streaming and another for its cable networks. Speaking of media giants, Netflix is getting hit hard today. It's actually one of the worst performers on the S&P 500. Meanwhile, Verizon is trading slightly lower, though still higher for the week after a Wall Street Journal report said the company is preparing to cut roughly 15,000 jobs as it looks to slash costs and stay competitive in the battle for wireless and home internet customers. According to the report, the cuts, which would be Verizon's largest ever, are expected next week, mostly through layoffs. Verizon also plans to shift about 200 stores into franchise locations, moving those employees off its payroll. The company had around 100,000 workers as of February. We're also seeing weakness in crypto today. Bitcoin has dropped back below 100,000, down about 7% this week and more than 10% this month. StubHub shares are getting crushed after the company reported earnings for the first time since going public back in September. The big disappointment, StubHub said it won't give an outlook for the current quarter and won't provide detailed 2026 guidance until next quarter's call. Investors clearly don't like the uncertainty. Walmart is also under pressure after announcing a major leadership change. CEO Doug McMillon will retire at the end of January at the age of 59. He'll be replaced by John Furner, who currently runs Walmart's U.S. business. Investors aren't thrilled with the surprise, and they have a point. Under McMillon's leadership since 2014, Walmart has outperformed the broader retail sector and the overall market. Walmart will actually be a big focus next week when it reports earnings on Thursday. We'll also hear from a long list of retailers, including Target, Home Depot, Lowe's, TJX, Ross Stores, BJ's, Gap, and Bath & Body Works. And let's end on a fun note. Today is National Pickle Day. Yes, according to the National Day calendar, today is all about celebrating the briny, crunchy classic. Quite a few places are actually getting in on the action. Buffalo Wild Wings is giving away free fried pickles with a $10 purchase today. Jimmy John's already has an entire pickle-themed menu, including a Pickle Witch, but it's offering a few holiday promos. And Pickle brand Grillo's is throwing National Pickle Day parties in New York, Boston, and Tampa. So if you're a pickle lover, today is your Super Bowl. Enjoy. That's all for today. I'll see you back here next week with more market updates. From the New York Stock Exchange, I'm Caroline Woods.